me 1 minute and I will get it all broadcasted.
All right. Thank you everyone for joining us. I'm watching these attendee numbers jump up and confirming that this is indeed a popular topic for today. So thank you for joining us. I am Erin McCuskey. I'm the director of the Northwest Colorado Small Business Development Center. I want to start with a quick thank you to our sponsors. So in particular, I want to call out Startup Colorado, Civic Canopy, the Colorado Office of Economic Development and International Trade, the Telluride Foundation, and I'll be handing it off to Bonnie in just a minute, so you'll hear from her, and also the Colorado SBDC Network. So on today's agenda, we're going to be discussing the Payroll Protection Program. As you know, we will be providing an overview of the new legislation, which has changed up the timelines and the requirements to be eligible for forgiveness. As our presenters are sure to repeat, funding is still available through this program, but it will close at the end of this month. And so businesses need to apply soon, definitely well in advance of June 30th, in order to give banks time to process the applications. I particularly want to encourage minority business owners to apply for this federal funding, as these businesses are typically the least likely to apply for financing assistance. The organizations who help to put on this call all exist to help entrepreneurs and small businesses of all backgrounds. And so more now than ever, we need creative ideas and solutions to help ensure that we are protecting our most essential and our most vulnerable populations. So with that, we have a slight change up to our agenda, although maybe I've got Steve on the call. Are you there, Steve? Okay, we're going to give him another minute to get connected. So we're actually going to switch things around and start off with ASAP. I'm going to turn it over to Bonnie Watson to introduce them.
Thanks, Erin. I appreciate it. So we have ASAP Accounting and Payroll on today. We have Mark Betts, who is the Senior Vice President, and then Tracy Kohler, who is the Marketing Manager. ASAP has served as a tremendous resource to especially us here in Telluride, educating myself and our team, and especially to the small business community. And they've continually showed up on these calls every single week, and so we can't thank them enough. As Erin told you, they're going to go over PPP forgiveness and practical accounting guidance in regards to that. So I'm sure you have lots of questions today. Understandably, we're going to try to answer as many of them as we can with the information that we have. And so I just encourage you to submit those questions via the Q&A function at the bottom of your screen there. And with that being said, I'm going to go ahead and hand it over to Mark and Tracy. It's all yours.
Thanks, Bonnie. Tracy, you with us?
I am here.
Great.
All right. And if you want to go to the next slide. Oh, we're starting with the
We're going to start with a poll, Tracy, just to get a pulse on everyone's concerns or what they're interested in hearing more about, the most about, something like that. So if everyone can take that quick poll real quick, we'll let that up and running and we'll get started, but we'll leave that up for a couple minutes just to help us gauge what you're most interested in hearing about. It is summertime, as you can see in Telluride, so we will be sharing slides, of course, and recordings afterwards. So we can move forward while they're answering the poll in the meantime.
And I'll go over the fine print here. Just a disclaimer, as I'm sure everyone understands, that the information we're presenting is general guidance that's based on our interpretation of the CARES Act and the Ppp Flexibility Act, as well as guidance provided by the US Treasury and SBA. And so this is based on what we know now, and as we're waiting for more information and more guidance to come out, some of what we share may change. So I just want you to be aware of that. And also, really, you should be consulting with your lender on their guidance and their forgiveness process, because they're the ones who are going to make the decision, and the rules or what they follow is based on their interpretation. And if you have a specific situation, definitely reach out to your CPA, accountant, or business advisor for advice on that. There's a lot of, anomalies, or what about this, what about that? And so we recommend talking to someone who knows your business inside and out, who could provide more direct advice for you.
Thanks, Tracy. A little background on us and ASAP. We are a bookkeeping firm that was started by my dad in Telluride about 30 years ago. I joined in 2002, and my background is more on the payroll and HR side of things than on the bookkeeping side. We are not tax preparers for income tax purposes. We work with CPAs across Colorado and across the country extensively, and like to see ourselves as part of our clients' accounting team. So just for that perspective, some of these questions will go into HR, go into income tax even. I just let y'all know that I'm not a CPA. I'm from a payroll HR background.
And I'm just a marketing manager.
If we can move forward, Emily.
But I've been reading a lot of the documentation. So,
Emily, if we can move forward with the slides, please. So here we are today. It is June 10th, and typically I was preparing to come in after Steve was talking. From my perspective, I just wanted to talk about all the challenges that we feel like borrowers, employers in general, accountants, everyone has been facing, and kind of there's been quite a bit of release of information here. So the CARES Act was signed March 27th. The first interim final rule was posted April 2nd. The first day of applications was April 3rd. 8-week coverage periods for some started April 10th. Interim final rules on forgiveness weren't posted until May 22nd, for instance, if that's correct, or the last one in that regards. The loan application was posted May 15th, and some people's coverage period was ending as soon as June 4th. Meanwhile, June 5th, the Ppp Flexibility Act was signed. So everyone's been trying to gather this information, interpret it, understand the program and its rules, all at the same time we had this 8-week clock ticking. So I think everyone on this call is probably a little exhausted, a little concerned, a lot of anxiety around this whole program. And so we're trying to help with that as best we can, but we're facing the same guidance challenges everyone else is. Traditionally, let's go back to Affordable Care Act or some big law like that was passed that impacted employers dramatically. They had quite a bit of time to absorb the CARES, absorb the act, have Treasury put out their interpretation, have Department of Labor put out their interpretations, and give people a lot of time to understand all the rules. Whereas in this case, we didn't, because of the nature of this being a stimulus program and trying to get things out there fast. So we're all hoping that this Flexibility Act and the provisions in it provide additional relief to employers to help with the forgiveness portion. Everyone's trying, from my understanding, from talking with lenders, trying to get people to have as much forgiveness as possible, as was the intention behind the program. And so let's see if we can smooth over some of these rules. If you can move forward, Emily. So what's changed with the Ppp Flexibility Act? Well, the headlines are the 24 weeks. It provides options to extend the coverage period to 24 weeks. The other one would be the 60% payroll cost. It amends the SBA rule requiring 75% of loan forgiveness amount be used on payroll costs and drops it down to 60%. It extends some of the safe harbor provisions, moving the deadline for those safe harbor provisions for FTEs and salary wage comparisons from, I'll get into that rule if need be, but from June 30th to December 31st. And it also provides a little more clarity in terms of inability to rehire additional workers, and for a safe harbor provision from relief from inability to rehire either the prior workers or similarly qualified workers from the past. There's also some new provision that I think is probably the most important in my mind, and I'm most interested to hear from Treasury guidance on, in relation to the a new safe harbor provision, essentially to provide employers relief if they were impacted for complying with federal health guidance from the CDC, Department of Health and Human Services, or OSHA. And we'll get into that one extensively here in a moment. Thank you, Emily. Some of the other impacts from the headlines are the maturity date has now been pushed to 5 years, and the deferment period extended for 6 months. Changes there. From 6 months to the date of the lower, let me reread that one because I may be stating it wrong. Changes the deferment period from 6 months to the date the borrower's loan forgiveness amount is determined. So that gives people time and aligns it up with the loan forgiveness application that employers can choose versus just a 6-month clock, is from what I understand. And it also opens up the employer payroll tax deferral program. I want to caution people a little bit on that one right now. From my background dealing with employers, I always feel a little nervous anytime a deferral comes up and people are pushing their tax obligations further and further down the road, because eventually those taxes will become due. The other thing to keep in mind on this tax deferral program is that it's specifically related to 6.2% only of the payroll taxes, and that is the employer's portion of Social Security. It's not all of the payroll taxes. You can't just stop making your payroll tax 941 payments. It's just one specific tax type in those 941 tax type buckets. And then it has their provisions on when they're due. The coverage period start date, what didn't change here is this slide. So the start date on the coverage period remains the date the funds were received, just as they were before, with that prior exception for those on a biweekly or weekly schedule. Those borrowers may elect to use an alternative payroll coverage period beginning the first day of the pay period after funds were received. The payroll cost definition did not change. That's still the same. If this is your first webinar on forgiveness, I apologize, because we're going to try to spend as much time on what has changed rather than these older items. But most types of wages earned by employees are included, including cash tips, are defined as payroll cost, employer group health insurance portion, and retirement benefit cost. Payroll cost incurred and paid. The eligible payroll costs remain based on the date the wages were earned or accrued instead of simply based on date paid. Initially, there was a lot of confusion, us included. We're confused by this. We thought it was going to be based on the check dates within that 8-week period. It remains based on the date, or it has been changed and it has remained to the date things were earned. Non-payroll use of funds remains defined as mortgage interest, rent payments, utilities, and utilities are listed there as the traditional electricity, gas, and water, plus telephone and internet access, and transportation cost. And transportation cost is one that you want to talk to your lender about to see if there's any. We'll get into that here. What questions remain? So for us, the biggest questions that we'll be looking to SBA director or the Treasury to answer over the next, hopefully, coming week. I don't know, maybe Steve will be able to provide us some information on when they expect some additional guidance to be released. They've been releasing guidance on Friday evenings, if not afternoon, pretty late. So perhaps they'll be able to release this Friday. So one of the big questions is let's just focus on what's changed here. So the 24 weeks period of the coverage period. Can an employer choose a period in between 8 and 24 weeks as their coverage period is a question that I have. And so far, it seems like the answer tends to be no. From what I'm hearing from guidance and CPAs, it's going to be either 8 or 24, nothing in between. The next question that we'll be looking to look at the guidance for is, will borrowers have to maintain that FTE requirement over the entire 24-week period if they chose that time frame instead of the 8-week coverage period? Because that really is going to be difficult for a lot of employers. They may want to choose the 24-week period so they have more time to spend the money, but if that FTE requirement is something they have to maintain for 24 entire weeks with 8 weeks of essentially loan amounts, that could be difficult under these circumstances where a lot of employers are facing huge drops in revenue. What will employers need to show in order to satisfy the new safe harbor provision related to the inability to rehire or hire similarly qualified workers? So this is a provision in the new law that kind of amends or expands a little bit on kind of the dilemma employers were facing where they offered jobs back to employees that refused to return. And so how are they supposed to document that? What are they going to need to provide to show that they did their best to rehire and hire workers but just couldn't, so that they can then escape the FTE requirement for that worker or not be penalized for it, essentially. From what we're hearing there, it could be just a lot of text messages, screenshots of emails, text messages, anything to document the worker saying, no, I'm not going to come back to work for you. What will employers need to show in order to satisfy the new safe harbor provision related to the inability to return to staffing levels pre-COVID due to compliance with federal health guidance on social distancing? This is the one that I personally am focused on quite a bit. The way I interpret this rule currently is that if, for instance, you're a restaurateur, or even in our business, I think, or retail businesses or any type of businesses that had to essentially reduce staffing, spread people out, send people home, were impacted in some way, what's the impact that they're looking for here? What's going to satisfy that impact clause to the level that Treasury wants? That's the guidance we're going to be understanding. But let's say you were impacted as a restaurateur. If this interpretation says that you no longer have to maintain your FTE requirements, then that really opens up the program for people to then choose 24 weeks as their coverage period, because then they don't have to maintain FTE requirements or show FTE requirements because they're a restaurant and they're at 50% capacity. And being at 50% capacity, for instance, is just not feasible to meet the FTE requirements as the law was initially designed. So this is the provision that I really want to understand the most about from Treasury and the SBA. How should employers perform their salary wage comparison? This isn't new. This is the one that I'm hearing that I think doesn't get enough attention, so to speak. A lot of people, initially ourselves included, were trying to understand how that comparison should look, what satisfies that comparison. And to give an example here, the 11-page forgiveness application that was released on May 15th spoke to annualized wages based on a pay period salary amount or an hourly wage. And so what is the hourly wage they're looking for? And I'm hopeful that they will look at it based on the, let me give you an example, a real world example that we're seeing. So let's say you had a worker that was working for you making, I'm just going to throw out $25 an hour. So that worker was at $25 an hour. You've hired them back to return to work at the same hourly rate of pay of $25 an hour, but because you have less work, they're not working nearly as many hours as they used to. And that working less hours impacts your FTE count already. So are they okay with your comparison just looking at that base hourly rate of $25 an hour and annualizing it? Or how do they want you to make that comparison to satisfy that requirement? And similarly, let's say that worker also had other earnings types. Are we just looking at the salary amount, the base salary, and the base rate of pay? Or are we going to look at other earnings types in making that determination of the comparison, such as tips that have probably vanished for a lot of employees in restaurants, or commissions for a lot of salesmen that have stopped, or bonus plans that were set up or in some form or fashion that have been impacted? So that is one area that I maybe there won't be any guidance forthcoming, and so it'll be up to lenders to approve or to give guidance there. But that would be one that I would be asking lenders about as you're working on things. Also, the sole proprietors, I hope there's some on this call that will still look at contacting lenders and applying. They have struggled the most with this process, being gig workers and those types. But in here, I think the forgiveness is based on 8 weeks of their Schedule C of line 33. Is that going to remain the same, or can those workers go to 24 weeks in some form and change that calculation? All right, where are we? Emily, if we can. Okay, what should I do now is a question we're getting quite often, or I assume people are thinking. We've been telling people to please run your business as close to normal as possible. It's not normal time, so, but if you can think about it, continue to only make your business decisions to schedule employees if you're able to put them to work productively. I think when this program was released, with all the confusion and rush, there was a lot of people saying, wait a minute, I've got to put all these workers back in to get this forgiveness, so I'm essentially paying people not to work. Now that this program has gone to 24 weeks, now that this forgiveness hopefully is going to be eased up a little bit, just more reason to just focus on running your business and not trying to, play with the numbers. Just run your business. Think of it as, how can I work productively, my crew, my staff, bring them back to work. If you're unable to bring them back to where you were before, then you want to focus on all these safe harbor provisions that we've been pointing out. Those will give you the relief, hopefully, but focus on running your business. Now, from an accounting standpoint, the bookkeepers of the world, start. I'm sure you already have, but document the payments you've been making, the date of the payments when they were issued, get those receipts to back up those payments, understand the payroll cost, see if you need to prorate payrolls that were cut off in between periods of time. Make sure you have those lease agreements to support that rent or other lease type. You may start working on your FTE wage comparisons if you feel comfortable there. Tracking the applicable payroll costs, as I mentioned. And then the way we've been, this last item gets into this the de minimis exceptions. So exemptions and what that means. This is straight from the CARES Act, that last point. That the administrator, being the SBA administrator and the Secretary of Treasury, may grant some, they have the room to make exceptions. And so when we're looking at, say, what's included in transportation cost, or what is a utility, or can I include this or not include that, or I ran my, you'll be working with your lender on those things. So a lot of questions we've been getting are in this gray area of, can I include that or not? So what we've been telling people is create essentially an Excel file. There's plenty of free ones out there. Be careful downloading it from an untrusted source, just from a security standpoint. Be careful of clicking on too many things or opening things. But if you have a good Excel file from a trusted advisor, start tracking your things. You know, stuff that's in the gray area, leave on your Excel sheet that you're tracking, and then if you need to include those, then start going through those with your lender as you're submitting your forgiveness application. All right, do we want to show the poll results? All right, so good. Everyone was focused on new items. Hopefully that's something I can cover more. We have some more Q&A that were pre-submitted questions, or do we want to start with Steve and then come back to those pre-submitted Q&As?
Yeah, let's move over to Steve really quick because he is on the line, and get his help answering some of the questions that you've already brought up in terms of timelines. Steve, can you hear us?
Hi, everyone. This is Steve, SBA. Can you hear me?
Yes, thank you.
Awesome. Thank you, Aaron. Mark, excellent job. Tracy, thank you as well. I just wanted to provide, from the SBA's perspective, some of the things we've been seeing with the Paycheck Protection Program in place. So to date, loan count, over 4.5 million PPP loans have been approved at the tune of $511 billion. That's $511 billion with a B. Lender count, we're using right at 5,500 different lenders across the nation. I mentioned that number because I think it's important to know that in a typical year, the SBA averages between 1,600 and 1,800 lenders to get its loan programs executed. So you'll see where that number is more than tripled just to handle this loan program. So SBA is putting its money and effort where its mouth is. Another item of note is that of those lenders, the smallest lenders, that is those that have asset reporting of less than 10 billion, have made 44% of the PPP loans. So the lenders that are out and about, moving and grooving, making these things happen, getting access to capital into the hands of entrepreneurs, are the smaller banks, the community banks, the town banks. Your local lenders are playing a huge role in that amount of money. Also with that, some nonprofits. We've allowed some nonprofits to apply to be PPP lenders. They've answered the bell to the count of there are some 60,000 loans that have been generated by nonprofit lenders across the nation to just under $3 billion by themselves. So I think that's a big deal, and I'm really glad about that. So the whole smorgasbord of lenders are obviously your traditional banks, with whom you're familiar with, small business lending companies, credit unions, both state and federal level credit unions, fintechs, the folks that exist and operate online are making them. Farm credit lenders are also making a nice portion of the PPPs. Savings and loans, yes, they're still around, are making PPPs as well. Certified development companies, those of you who are familiar with the SBA 504 program would recognize them. They're making PPP loans as well. Non-bank CDFIs, micro lenders, so your small players are also making them, and BidCos are also participating in the PPP process as well. Here in Colorado, we are just under 100,000 PPP loans that have been made since April 3rd, to the tune of over $10.2 billion. So Colorado is getting our fair share and more, a little bit via percentage when you look at the per capita rate. So we're doing pretty good in holding our own as far as getting our loans in. And then another nice number is that it is true to say that just over 44% of all PPP loans, the actual loans themselves, have been under $350,000. The average PPP loan size is $113,000. So even though the news and media seem to be replete with large mega million companies getting these loans, the actual mathematical fact is that it's small lenders making small loans to small businesses across the board, and that is the lion's share of what's truly happening. Now, another thing I want to point out is that the top lender in making loans is JP Morgan Chase, but Chase has only made 4.3% of all the PPP loans. So that means 96% of all their loans are made by everybody else. So again, the lion's share of the loans are being made by lenders you know. By industry, and I think this is interesting too, the top 5 industries that are receiving the PPP loans: healthcare and social assistance industry, the professional, scientific, and technical services industry, the construction industry, the manufacturing industry, and the accommodation and food service industries. Those are the top 5 industries that are receiving the PPP loans. And for anyone who wishes, I can send you a further breakout of that number. But I thought that was interesting to point out just so you could see. The PPP program itself, and Aaron, thank you for bringing this up, will sunset on 30 June, which means that it has to be approved by then, not submitted by them, but it needs to be approved by them. So do what you can to make that happen. I believe 30 June is on a Tuesday. So basically the Friday before, you're going to want to go ahead. If you have not already applied for a PPP loan and you think you want to, make sure you do that the Friday before the weekend of June 30th to make sure that the lender has the time to receive it, to put the application in and get that approved. Right now, there's just a little bit over $130 billion left in the Int'l. We do not expect that amount to run out. We think that's going to be available to you and throughout the program. So that's good to have, just to make sure that assurance is there. So there's no rush on the actual funds availability, but there is the clock is starting to tick, if you will, for getting your application in. Now, having said all that, and Mark definitely did a good job, I just want to point out something else. And you may be aware that the PPP loan program began on 3 April. Today, obviously, is 10 June. So what's that mean? That means there have been 48 business days in the history of the PPP loan program. 48 business days. During that time, there have been no less than 16 different interim financial rules of guidance that have been put out, and 48 clarification or FAQs that you can find on the Treasury website. So what that means is, and we are averaging over 1.3 changes per business day to this program since its inception. And the fact that Mark and Tracy were able to sort of wrap their arms around a constantly moving miasma of a program is very impressive. Thanks again for that rundown. Wouldn't disagree with that point that you brought up. I thought it was very well done. But I will reserve comment on the changes that are coming, just because they're changes and they're going to be in place. And as soon as I say that this is going to be new, it's going to be different. So what we're expecting is in the next few days, probably by mid next week or end of next week, we're going to see the new PPP loan forgiveness drop from headquarters. And some of you are thinking, well, wait a minute, didn't POTUS sign that into law a few days ago? Yes, but the way it works is that the Congress generates a bill, and once that bill is signed by POTUS, it becomes law, or it's enacted, or commonly called an act. And once that happens, the law typically stipulates which agencies are going to be put into play as far as enforcing, executing, and administrating and overseeing the processes or processes that are in that legislation. And so where it's at now is SBA and Treasury are looking at the law as passed. They're looking at the systems and personnel that we have in place in order to make that happen. And then from there, we're going to be issuing standard operating procedures or guidelines in order to make the changes happen. And just like anything, it takes time to go through those machinations and processes. I'm sure, as always, the SBA will be working over and through the weekend to make sure this happens, to get that out to you as soon as possible. So I would encourage everyone to please continue your persistence and your patience as we wait for the new forgiveness rules to come into play. And then once they come out, we'll be much better suited to answer some of the questions that the natural and organic questions that you would have with this process. So I beg your apologies and forgiveness ahead of time, and that a lot of questions I just won't be able to answer because we just don't have the guidance yet. Know that it's forthcoming, and we're sort of on a any day now track to receive that guidance. So again, well done, everyone. Aaron, thank you for your time, and I'll hang around to see if I can answer or attempt to answer any questions that anyone has.
Great. Thank you so much, Steve. And I just want to kind of reiterate something that you just said, that when we planned our topic for today as PPP, it was kind of by coincidence that the new legislation came out, but yet the exact forgiveness guidelines have not been yet released. And so that's where we decided to roll with it. We know that there's a lot of interest, but we are still working under some assumptions, and we'll plan another call, and I'm sure many other organizations will as well, as soon as we have some of the more specifics and the next round of regulations drop. So thank you so much, Steve. I'm going to pass it back over to Tracy and Mark to address some of the questions that were pre-submitted, and then we'll start going through some of the questions that we've gotten live in the chat function here.
Great. Thank you, Erin. And yeah, a lot of the questions that we're seeing in the Q&A, we do have them answered in these next few slides. So if you'll just bear with us, we'll go over these and then open it up to ones that we haven't gotten to yet. So one of the big ones is, if I already have a PPP loan, will I automatically get to use the new requirements under the PPPFA? And the answer is yes. Most of the provisions are applicable to if you have an existing PPP loan. You will indicate your covered period, if it's 8 weeks or 24 weeks, when you submit your application. And if you have an existing loan, you can still use that 8-week covered period. And Mark, if you want to elaborate on that.
Not so much on that one. I think that one's, yeah.
That one's
it's
good.
going to be the coverage period is going to be, well, I guess I could elaborate forever, but the coverage period is going to be up to each borrower. And I think Steve mentioned this, but I was answering some Q&As at the time. I think we're going to hear a new application that's going to be smaller, like a 2-page. Application will be coming out. And just keep that in mind in relation to the answer to the next question about when can I start applying. So you want to work with your lender. I may have jumped ahead on this. By what date do I need to apply for forgiveness? You have up to 10 months after your covered period ends to submit your loan forgiveness application. But be in contact. Lenders a lot of lenders were going to open up some software-based, web-based loan application forms to be completed. And then the new legislation was passed last week. And so now they're looking at their software vendors and having to make adjustments to their softwares. So some of this might be delayed a little bit, lender to lender, but speak with them. And one point I also want to make on this is, before you submit your loan forgiveness applications, please speak to your CPA. There likely will be tax consequences in terms of how the forgiven expenses may impact borrowers from an income tax standpoint, or there could be. So don't do this in a vacuum without contacting your tax preparer to see how those expenses or forgiven expenses may have an impact, if any, from an income tax standpoint.
Great. And this question, there's been some confusion with PPPFA, regarding what is allowed and not allowed as expenditures if that had changed per PPP FA, which we addressed previously. But just to reiterate that the PPP Flex Act did not change allowable payroll and non-payroll costs. I think there's been some confusion because there were multiple proposals and drafts of bills in the Senate and some other legislators who were trying to come up with their own fixes to PPP. And some of those did include expanding some eligible non-payroll costs. But the bill that passed was HR 7010. Yes. And so it was a House bill. So just to confirm that that version did not change which expenses are allowable under PPP for forgiveness. We can go next slide, please. Mark, I'll let you take this one.
Okay, with the new guidelines, when do I need to rehire employees? And how long do I need to keep them employed? What if business drops this summer and I need to lay off some employees? Per the new guidelines, you have until December 31st to rehire employees in order to meet the safe harbor FTE requirements for forgiveness, rather than it being June 3rd. Current guidance does not indicate how long you must retain those employees. So if you need to make business decisions we encourage you to continue to make those business decisions for even layoffs if need be. In terms of the safe harbor provisions, gets back to what does that FTE exemption, what's it going to look like based on compliance with public health orders? You know, are you going to be able to, if you qualified for that, would that then change how you structure your business for the remainder of the summer? Because like we're all seeing, a lot of businesses are severely impacted from a revenue standpoint, and when the money runs out for PPP, they're going to face some very hard decisions with layoffs, and some of those decisions could come sooner, you know, and may need to come sooner to help the business survive and continue to make rent payments. So how that FTE requirement plays into this going forward for forgiveness is going to be important in making business decisions. Can I include a bonus for employees as part of forgiveness or hazard pay? Yes, is the short answer to this. However, we are looking to see what the guidance is going to entail in terms of the annualized cap per employee. Are they going to extend that to be based on 24 weeks if you elect to have a coverage period of 24 weeks, or is it going to remain capped at the 8-week compensation limit? That'll be a question that everyone will be watching. Early indications, well, I shouldn't say, everyone's maybe all over the board on that reading of that. But in terms of the original question on bonuses for employees, it does not. The guidance does. In fact, there is a statement in there that addresses this in the FAQs. I think somewhere, if someone really wanted to search for it, I believe I read that that bonuses, and it does not specify what type of pay you're paying your employees. It doesn't say, you increased pay or paid bonuses over that time period. There's no penalty for that. Do I need to rehire the same employees? No. You can rehire different employees to maintain that requirement. They can, and when you do that, the salary wage comparison really changes there. So you don't have to pay them a new hire at the same rate that you paid an old employee. So if John was working for you before, but you hired Sally, you can pay her more, you can pay her less. There's no wage comparison between Sally and John in that example. You won't have to, the salary wage comparison from what I understand is only based on the same employees that you retained over the two periods of time. Headcount, again, it's an FTE, it's not a straight headcount. I just want to point that out. Or will forgiveness just be based on overall payroll?
Oh, sorry, Mark.
No, go ahead.
Remind folks that the FTE is based on 40 hours average worked per week. And there was some initial confusion around that definition. So full-time Someone who works 40 hours on average a week equals 1 FTE. And you do have an option to count a part-time employee as 0.5 FTE. And then there is another calculation you can use instead that's more proportionate.
Yeah.
Oh.
Thanks, Tracy.
Mhm.
Is there one more page of questions that came
There
in
is one
beforehand?
more. And the first, this is
If they don't want to return to, if they don't want to return to work, you know, I think we spoke to that safe harbor provision and documenting that, and that would provide you some relief there. And then I'm a little confused on that reporting employees' refusal to return to work for state unemployment. Is that something that's still in the new guidance, or is that an old guidance?
Oh, I'm sorry, Mark, I had included that because there was a lot of question too about, you know, do I have to, if my employee doesn't come back and I get a UI report, do I have to complete it legally? You do.
Oh yeah, UI reporting is still there. So if that's correct.
So some people were.
Job duties can change over this. They're most likely going to change for a lot of employers. So yes. Seasonal businesses are having a lot of confusion. So I would definitely be in contact with an advisor if you're confused on how to use the funds for a seasonal business, in particular for the businesses that were impacted at the end for the winter season. I know one of our snowmobile company guys was really impacted, and how does that work for him now that, well, we had snow 2 days ago, but how does that impact him in his business, in particular if it was a winter only business? That would be one that you'd have to really focus on and work with the lenders to use those funds. But there are provisions in there for you to use alternative coverage periods and alternative reference periods to qualify for the forgiveness. Sole proprietors and gig workers, what are they going to have to show for reporting forgiveness? This could be purely mechanical. It could be based on the Schedule C, line 31 from their 2019 Schedule C. And so is that going to be now 24 weeks or 8 weeks calculation there? So, and then this last one, is kind of I'd push this to Steve. I don't know if you can see it, but I got the PPP, but I'm afraid to spend it out of fear of the forgiveness not coming to fruition. Can I return it now? The provisions to return it have already passed, but the program was designed so people could use the money. So I'm sure maybe Steve wants to address this one if he has a moment.
Absolutely. It's a good question and a fair question, and correct. The safe harbor date, end of May, has already passed. However, if you do, if you've received the loan, but you haven't paid it out and you're not sure was I supposed to receive it, was I eligible, that kind of thing, first, call your lender and ask your lender. Your lender should be able to answer that question directly. If your lender has questions, at that point, please call or email me, and I'll be able to walk you through the eligibility portion there. Because I would rather you be able to use that money for the purposes or the intention for which it was designed than for you to, out of fear, not use that money. I mean, the idea is to get money into the hands of business owners, and for then to turn around and put that into the paychecks of the employees, or if you're the business owner and you're sole yourself, if you're the only one there. So that's really what we're after. Obviously, we want to do that right and not put that into the hands of people who aren't supposed to receive it. But I would hazard a guess that 99% of the people who did apply for this are eligible, at least to some degree. There may be different degrees of eligibility within that, but definitely before you return that, please let's have that conversation and make sure.
Steve, while you're on the phone, we're getting some questions over the Q&A regarding people wanting to know if they can reapply. for a larger loan amount now that the program has gone to 24 weeks? I'm assuming the answer is no on that one. That the changes were providing more expense time, but not changing the amount of the loan. But go ahead, I just answered it for you.
That's correct. Yeah, under current guidelines, no, there's not going to be an allowance for increase. There is some minor allowance for deviation, and was there an incorrect application made, so you're a point off here or there, and that kind of thing. But largely, by and large, in most cases, that there will not be an allowance for increasing the PPP amount.
Great. Bonnie, or do you want to? Are there any of these questions you want to ask to Steve and I and Tracy?
Yeah, thanks for that, Mark. So Aaron and I are just going to kind of go back and forth and try to answer several of the questions that we've received. One question that I get very often that was asked in the Q&A is, do lenders have any flexibility around forgiveness for businesses affected by state, county, and local health orders versus just federal? The answer is no. We have to follow the federal guidelines at this time. Mark, I don't think you probably have any feedback there in addition.
No, but I mean, I think that kind of hints at what I was talking about in that safe harbor, that new safe harbor rule in terms of CDC guidance over the period of time March 1st through December 31st. So if you go back to the guidance that CDC released for a lot of employers, I would analyze that, yes, that the orders to close came from the state level or the county level, but the CDC guidance was suggesting that they start social distancing. So even though the state order was to close, you may qualify just because the federal guidance was social distancing alone impacted you. That yes, the state order impacted you even more, but federal guidance may have impacted you enough. So I wouldn't just throw that out just because it's federal. I would really look at those guidance, and in particular once Treasury comes out with their information on that.
Great, thank you.
So a question in the chat, which I think kind of summarizes what a lot of people are getting to. Now that the 24-week period is an option, would it be easier and potentially safer to spend 100% of the PPP funds on allowable payroll costs instead of worrying about any of the other eligible expenses?
Absolutely. If you want to spend 100% on payroll costs, go ahead. That is absolutely perfect. Yes.
The only thing I would say is talk with your tax preparer. There could be a mundane. Everyone's on the tax side, the accounting industry, the CPA industry is looking at the nature of the expenses and if they will impact a business. It sits in weeds. I'm hesitant to say. I'm not a CPA, but there is a little bit of chatter about type of expenses if there's a different treatment under the tax provisions later on.
Aaron, I'm having some mic issues right now. Could you ask another question quickly so I can dial in?
Yep, absolutely. So can you speak to, if you know, the relationship between the EIDL advance and the PPP forgiveness? Do we still anticipate that that grant will reduce the amount of PPP forgiveness?
Steve?
So in the first round of forgiveness, what we understand was that if you used the Economic Injury Disaster Loan or EIDL program, and if part of that was to include payroll expenses, then what was supposed to happen is that if you also got a corresponding Paycheck Protection Program loan, that the PPP loan should absorb the EIDL, and then the advance amount would count against your potential forgiveness. Now, that is still being debated back and forth. The truth of what I said, that's the understanding that our district office, the Colorado district office, came to, that was not firmed up in bedrock concrete. But with this new forgiveness or the flexibility that's coming out, we anticipate that we're hoping that will be addressed and cleared up. But right now, the way I understand it is that, yeah, if you did receive an EIDL, and with that EIDL you received an advance, and it was used for payroll, then you should include that in your Ppp. The lender then turns around and pays off the EIDL that they basically cut a check back to SBA to pay that off. And then when it comes time for forgiveness, the advance amount would be subtracted from your forgiveness eligibility.
Okay, great. And I just want to acknowledge we have a lot of questions and we are not going to be able to get to them all today, but I'm going to summarize what I'm seeing as the most common. I know Mark and Tracy, I think you both addressed it already, but can you just repeat, when can people apply for forgiveness? Can they do so at the end of the 8 weeks? Do they need to wait until the 24 weeks? And when do we expect that the forgiveness guidelines will come out? The revised forgiveness guidelines.
Well, I can speak to that, I believe. My understanding, and Steve, please correct me, is that you have 10 months after the end of your covered period to apply for forgiveness. And as we discussed previously, if you meet your forgiveness requirements and you're done, you spent your money and you know you met those requirements, go ahead and apply for forgiveness. And also, as Mark said too, consult with your CPA or with your tax advisor just to make sure that you're following all like possible implications. But there's time to think through this. It's not like as soon as your covered period ends, boom, you have to apply for forgiveness. You have some leeway to make sure you can meet those requirements.
Great.
Absolutely, I would echo that. Yes, ma'am.
Great. Well, everyone, we are at the end of the hour here. And so I just want to give a big thanks to Tracy, Mark, and Steve for their time today. As we close out here quickly, as always, we are going to send a follow-up email with all of the resources that we talk about and that are listed here on this page. I would just like to, again, mirror what Aaron said. We do have lots of unanswered questions. And so if you have a question that was not answered here today, I urge you to please email startupco@colorado.edu so that we can address those questions for you. And quickly, while we close out, and Emily, if you want to go to the next slide there, we are super excited to announce that West Slope Startup Week is a go this year. We're going to do it in a new virtual format, and it's going to happen from July 7th to July 30th. And so a lot of people ask and maybe didn't attend last year. This will be the second year for the event. So it's a 1 week of virtual programming throughout the month of July, and the event will be held every Tuesday morning and Thursday afternoon, starting on July 7th. We get a lot of questions. What is it? So Techstars Startup Week West Slope is a free multi-day choose your own adventure meeting of the entrepreneurial minds and a celebration of West Slope Best Slope way of doing business. And I always get a lot of questions. Well, who is this for? It's for everybody. It's for current founders, repeat founders, people who want to start a business, serial entrepreneurs, first-time entrepreneurs, entry or level executive level employees working at a company. And it's not all about tech. This is really for the local Main Street business or for a high growth startup, for ag producers, for growers, and so many more. So when we say pick your own adventure, we mean that you can pick and choose your whole schedule throughout the month of July. And we have 8 different tracks that we look at. We look at communications, capital, technology, toolbox track, which I call the skill building track, the people track, makers track, food and agriculture, and then the fun track. So it's a really great event. If you're part of it last year, please tell everybody that you know about it again. It is virtual this year. And we are really excited to announce that this year we'll also be having office hours. So if you're a business looking to meet with a mentor, and that's so applicable now in today's new normal that we're experiencing, you can sign up for office hours to meet with a mentor. And we highly encourage that. So I would encourage you to go to westslope.startupweek.com and go build your schedule and attend all these really awesome sessions with really inspiring and very, very knowledgeable people, and go out there and build your schedule. With that being said, we'll have a follow-up email with all of the resources discussed today, the call recording, the presentation, and everything else that you need to know. We hope you have a wonderful afternoon. Thanks for joining us, and we'll see you in a couple weeks.